Okay, hey, Ryan here with Bond Street Mortgage. I have James. We're going to do our quick weekly mortgage update. James, what's going on out there in the mortgage rates world?
Hey Ryan, how are you?
Good.
Rates are higher this week. The last couple of weeks, obviously, hurricane, North Korea threat, economic numbers so. You actually had rates go pretty much actually to year low and to December lows. And since then, this week and really over the last 10 days, which has been the trend with the Fed meeting. And what happens is the Fed met Tuesday and Wednesday of this week, and every Fed meeting so far this year, in anticipation of that meeting, interest rates have gone up into that meeting. It's been like clockwork, actually. It's pretty predictable. And after the fact, then you have things settle down, and that's exactly what happened. About 10 days ago, the 10-year bond was close to 2%. Today, we're at 2.25. Going into the Fed meeting on Wednesday's announcement, it shot up to about 2.29. So you can see we've already kind of settled back towards this 2.25. And the reason for that is that the Fed was very hawkish, more hawkish than even I expected them to be. When it comes to a rate hike in December. So you take 2% plus a quarter hike, that's now anticipating in December, when prior to the meeting the chances were less than 50%. You're at 2.25 on the 10-year Treasury, and that's exactly where we stand today. So now we're at that crossroads again, and what happens from here.
So,
go ahead, please.
So 30-year fixed, good credit right now.
Still around 4, maybe even a touch under with excellent credit.
Okay. What's the worst case? I had a friend ask me today. He's in the high sixes, a little bit of a shady, a couple dings. If you have a 660 credit score, you can still get financing now, right?
Absolutely. Yeah, you can get conventional financing down to a 620 credit score. Fannie Mae and Freddie Mac allow for as low as 620 FICO score.
And what do you look like with a little bit? So at less than perfect, do you go to 425 or it's hard to?
Less than perfect credit?
Yeah.
When you say 420, 4.25, you're saying. Sorry.
Yeah.
As far as yes, it's based. It's and you can find these online too. It's loan level price adjustments, right? So based on FICO, LTV, and basically there's a grid that would reduce the mortgage price in the secondary market, which is additional risk, right? Loan to value and credit score are seen as additional risk as the credit score goes lower and the LTV goes higher. So that typically translates, yes, about 0.25%. It's not anything, too much out of whack.
Great.
If it's an investment property, compared to a primary residence, also the use of the property will also have an effect on that. So if you have a 660 credit score and it's a primary residence, you're going to get a better rate than 660 investment property.
So single family investment property, if I put down, say 25%, how's that compare to if I was owner occupying the rate?
So you'd be probably if you were at 4.25 on a 660 primary, you'd probably be around 4.75 on the investment property.
Okay, so about plus 0.5. And guys, everybody listening, I'm just spitballing at James, picking his brain. We have no idea until James looks at all your info.
Absolutely, yeah.
But if you're an agent listening to this and people are asking you these questions, these are good guidelines to go at, and just tell them they need to talk to us.
Yeah.
For the real deal. Okay, so rates going a little bit higher. No reason to panic, right? It might be a good reason if you see rates going up and if you're on the fence, now might be a good time to buy.
Yeah, absolutely. And that was the funny thing about the Fed statement. And Chairman Yellen gave a press conference after this meeting. I think they do every other meeting. She does the press conference, but. So, she was asked about inflation because inflation has actually come down over the last few months, and she's calling it the Fed is calling it a mystery of why we have low inflation. She does believe that inflation will get back close to 2%. So, it's funny that they would remain hawkish on a hike, especially with all the uncertainty with things like North Korea, the healthcare, the tax reform, Washington in general as a whole. So there is a lot of doubts out there for them to be as hawkish as they were, with inflation being on the lower side. They want 2% inflation. That's their mandate. So it could be tough talk by the Fed, and that's happened before. So I believe, and of course, as you know, just my opinion, but I do believe we settle down here. Will rates go much lower? Probably not. Is the risk more to the upside? I'd say it's very neutral, especially where we settled here. I think I'm very comfortable in saying that the 10-year bond at 2.25 today, we're probably going to stay in that range, through the end of the year. Now, again, there are some factors. If we do get something out of Washington, probably would be inflationary, at least if it's good news. If it's bad news, we're going to probably go back down. But I feel very comfortable with interest rates where they're at. If you look at, the sales data, what's funny is, as we know, the spring market really, the crescendo is into August. And we had existing home sales were down a bit. They were basically flat, up 0.2 from last August, which is fine. But, as much as I always said and believe residential real estate is back, we're still not, gangbusters by any means. We're just consistent, and that's fine, and that's a good thing. So I don't see inflationary pressures, and I see more of the same. And I think if history, and especially our history, our two biggest closing months of the year, August is always number one, and number two is always December. So I think you'll see the same again this year. We'll have a nice push into the end of the year, and I'm very comfortable where we are as an industry. And I would say this is exactly what I projected, and I see, really great years ahead.
So you said December gets busy. So is now a good time to get a lot of buyers resurface right now to buy homes, and you're going to have more competition if you're out there searching?
Yes. I mean, if, by nature, I guess many people are procrastinators, or if you don't have kids and you didn't make the crazy push through the spring market, because obviously with the school year starting in September, but your accountant is telling you really should buy a house because it's going to help you save money on taxes, you're definitely out there now, again, kind of looking at saying, like, you know what, I didn't want to overbid for that house just because somebody else was willing to outbid me because they had to close before the school year. I'm going to see what was left over, and I'll keep an eye on these few houses. And if they're still on the market, I'll go for that. So end of August, Labor Day, back to schools. You also have Happy New Year to all our Jewish friends, the Jewish holidays yesterday, and today is the New Year, and you have Yom Kippur, and then so it's a little bit of a quiet period for new business, and then boom, you hit October, and you make a big push to the end of the year with those people that were left over from the spring market. Cool.
All right, so bottom line, still same story every week. Rates are still crazy low. If you're thinking about buying a house or buying an investment property, might as well do it now before the Fed decides to start raising things. Doesn't look like they're going to, but it's a great environment. There's no reason not to make your financing decision now, because it's just a great environment.
The Fed will use their words to move policy without having to change the policy. So I think that was more of what the message was. The stock market keeps hitting all-time highs, which is great for our industry, frees up more money. Creates more wealth, but obviously they don't want things over bubbling. So it's kind of like, when your mom used to say to you, stop doing that kind of thing without doing, and that's all she had to do was say it, and you stopped doing what you were doing. So you see that the last few days, the stock market's sold off very little, not much, but it's kind of like, hey, let's try to keep things from getting too crazy here and level off and see, where we're going to be in the next couple of months.
Cool. All right. Thanks, James. I think we're good. We'll be back here next week. And if you like this weekly mortgage update, feel free to share it with friends, share it with clients. If you're an agent, if you know somebody who's thinking about buying a house, they might find this information useful, and we'd love to see you share it. We appreciate it.
Absolutely. Have a great weekend. Thanks, Ryan.
Yep. Thank you. Bye-bye.